So a lot of lenders have been reaching out to me, the financial architect, asking what's better, getting a 15-year mortgage or a 30-year mortgage? I always say, numbers don't lie, people do. Let's check it out, 15 or 30. I have two different scenarios, scenario number one and scenario number two. Scenario number one, it's Bob and Mary. They both make a combined income of $150,000 a year. They have two children. They get a 15-year mortgage at 2.6%. They want to save a lot of money on interest, $4,000 a month. And after 15 years, it's paid off and they have nothing saved. Scenario number two is Jose and Guadalupe. You got to keep it Latino sometimes, right? They also make the same amount of money, have the same amount of kids, but they get a 30-year mortgage at 3.375, $26.94 a month. They have a monthly savings of $1,338. Here's the key. If I take the $1,300 and I put it into an interest rate at X, will I outperform the 15-year mortgage? Comment below. I'd love to hear your answers. Bye. All right, part two of do I get a 15-year mortgage or a 30-year mortgage? In the 15-year mortgage, you have a paid-off house, and after 15 years, you had zero saved up. If you would have gotten a 30-year mortgage, you don't have a paid-off house. Your paid-off balance would be $374,000. After 15 years, though, you took the $1,300 at an 8% rate of return. You have $465,000. Now, can you pay off your house with your $465,000 after 15 years of $374,000 balance? Yes, you can. But let's just say you get a 30-year mortgage and you continue to save $1,300, you'd have $2,011,069. If you got a 15-year mortgage, paid it off, and then you start saving $1,300 a month, you'd still only have $465. Which is better, $465,000 or $2 million?